Hello and welcome to Charts Today, this special report. My name's David Linton, and this time a week ago we produced a report which lots and lots of people have been asking comments about these 10 big questions for financial markets, and we posed these 10 questions. One was the US stock market entering a new bear trend. US tech stocks, are they going to rally higher or collapse? Which European stock markets had the most upside potential? Does sell in May and go away really work? And what do charts tell us about bond markets right now? Which currencies are set to rise and which ones likely to fall? Is gold really set to rocket like commentators are predicting? And how much higher can the oil price go? Can Bitcoin move back above $20,000? And which market is the potential black swan? Now we're 1 week on, and already have had people asking for an update. What's changed? So rather than just rewriting the report, it's actually probably just as easy for me to comment on it. So in the report, the first question was, is the US stock market entering a new bear trend? We saw all this volatility at the end of the market, and here we see the S&P 500, the Nasdaq 100. It's opening out here, this pattern, and the Dow Jones Index and the Russell 2000. Now, one of the things we can do is in Updata, we can actually go and look at all of these things live, but also I can actually just go and run the report. So in the Enterprise edition of Updata, I can simply just choose this same report and I can rerun it manually. So I can actually look at every chart. So this was a weekly chart, and this is where we ended last week on the chart. And we can see here that this week we did just sort of start to break out of there, but this week we are coming back. And if I go and look at the S&P 500 index, I can actually just go and get that overall position, and I cover this of course in Charts Today each day as well, and we're just getting above here on the medium term chart. And if we take a look at the Nasdaq 100, again we are just getting back above, but we're still yet to make the higher high. So the position on the US markets has improved slightly since that report a week ago, but in the scheme of things we still have this down candle this week. So it's not clear yet, and the broader Russell index we're seeing is just pushing that little bit higher. So it's a mixed picture basically, but if we go back to the report, in terms of are we entering a new bear trend, we're probably less likely with some of the improvement in some of these charts, but we still can't say this for sure until we make a new all-time high. So that's the key thing to be looking out for on the charts here. And if we go and just go through the next few charts, we can just see what's changed. Again, these are different time frame charts, and just running through the report. The point and figure chart. These are quite long-term charts I used here. This one, the Russell here, is just changing a little bit. It does look like we're starting to break, but it's not yet clear cut. The next question on our list was, are US tech stocks set to rally higher or collapse? And we looked at Apple, Facebook, Google, and Amazon. There's sort of four tech giants here, and we gave the commentary on each. But again, we can just go and look at each chart on its own merits. So first of all, it's going to load here. It's got to remember it's loading all the data plus the updated chart. So this is the relative of Apple relative to the S&P 500 1 week on. Not really changed that dramatically. We see the last few trading days of Apple, we've held those gains. And of course, if we want to go and look at the shorter term position on Apple, we can go and do that in our Charts Today templates here. And this is the 60-minute position, pretty flat over the week. So not much change there. If we go and look at the next stock, which was Amazon in the list, and we see here again loading. Oh, sorry, it was Google in the list. Google over the last few weeks just again has underperformed and just turning down, not having a great time, consistent with this feeling that Google really just isn't performing, and we see that again, just this flat performance, not really outperforming the market. and the daily chart not managing to get back above the medium-term trend. So Google not looking so good there. And if we look at Amazon, in fact, while we're doing that, we can go and take a quick look at Google on the shorter term charts. And we see here again on the 60-minute chart just turning down over the last few days. We do have a downside target here of 6% on Google. So no great changes there in terms of the picture. And last of all, if we take that's Amazon. Amazon continuing to look very strong, outperformance of some 74% over the last year and a bit. And if we look last of all at Facebook, again we've got no real change in the picture here. A lot of these charts were long term, of course, so it's worth remembering that. Which European stock market has the most upside? Well, again, we can just quickly look through the report here. And so we can just go through looking for changes. So this is the 1% point figure of the UK market. No great changes there. This is the UCAP mid cap market. Again, no great changes there either. And we can actually go through and see the DAX is still looking strong. The CAC Courant was the one that we felt in the report looked really good, just starting to break new highs. Relative to the UK, here we see it's just not really changed that much, but can it just break to new highs? Just starting to test there. So Paris still looking like the strongest proposition in Europe, which was pretty much what we said. We then talked about the idea of does sell in May and go away work, and we looked at the seasonality. We tested that on both US and UK and Japanese markets, and so we can just see what the market has done since. Not much. Again, over the week, markets have been a little bit more sedate. The FTSE continuing to climb, not quite making new highs. And if we look at the Japanese market, much the same. Now, we did do a very interesting chart, and this has loaded the system test. And here we see the equity line for sell in May and go away. And in fact, what was most interesting about this, running the test, so the top 10 results were, so the exit month was May, and we just set that as May. And what we found with the top 10 results was 5th of May, 8th of May, 1st of May, 5th of May, all really roughly in the first week of May was in the top 10 results of what day in May you should sell in the year. And then we did actually optimize, that meant varying it again for month, which month. So we allowed it to be a different month from October, which is month 10. And you'll see that month 10 was actually 6 of the top 10 results. We did get August and September. So it does imply the autumn, but actually October did come out top, and again it was early October in the top few results. So it does suggest from that, and we see all the trades, and you can see the system here, but if we go back to looking at that chart, you can see here that we've really quite considerably outperformed by not having this drawdown back in 2000, 2008, and most years it has paid to actually sell in May and be out of the market. This is the flatlining of your equity, and then come back at Labor Day. So as a strategy, that has worked. That doesn't change anything. And so far this May, we haven't really had a great improvement in the market yet. We then next talked about US, what do the charts tell us about bond markets? And at the time, we were saying we're really testing resistance here on the US bond market, but we expected that bonds would break out. And if we look at that, that really has happened. So that in less than a week, we've actually broken to now to 7-year highs. So we are seeing US bond markets really starting to run now, which is as we said. And looking at German bond markets, we expect those to fall quite heavily. Remember that what we were looking at just now was the bond yield for the 10-year US bond. This is now the Bund, the actual bond price. So the bond prices are set to fall, and there's since been turmoil in the Italian bond markets in the last week. So that's consistent with the picture. Not much changed. Downside targets were quite long term. They're still very much in train as well. And if we look at the shorter term chart that we used in the report, we said 3.2%. Remember, bond markets were when we were looking, we can go back and look at that. We were actually below 3%. So we were saying 3.2% was a target. We're already hitting 3.12 on the bond market, so getting quite close to that, and then a longer term target of 3.9%. So that's playing out. So far we haven't found really any consistencies. The other one that we talked about was which currencies, and we talked very much about dollar strength, and a lot of people were saying that this dollar run couldn't continue. And in fact, we've bounced back this is the daily chart. We've bounced back, and we're pushing even higher than the levels that we saw just over a week ago. So it does really suggest that the dollar can go higher, and we saw this in the targets here that we talk about the dollar going either way. But perhaps one of the most telling charts was this euro dollar chart, seeing the fall away. This is the long-term chart, seeing the fall away at resistance, and this is really highlighting a fall in the euro. And now we're seeing news flow coming out like the Italian the markets wanting to leave the euro, and we're seeing more and more trouble coming in store for the euro, but that is consistent with the chart. So dollar strength is still very much the theme, and 1 week on, that's very much the case. And we did talk again about lower sterling in the report, and if we go and look at sterling, we can actually see if we go and just look at sterling against the dollar, we're seeing that sterling weakness just continuing. A week on, not a great deal of change, but we are really just sitting below here at this 135 level. So the next thing that we talked about was is gold really set to rocket? Now here we have seen quite a big change in the last week. So first off, if we look at the first chart of gold, the long-term picture has not changed. We have made this bullish transition, and we're long-term bullish, and we still do have again lots of bullish indicators. So we've crossed here on the dollar index relative, and we're seeing here that we are just still correlated with the dollar. So the dollar strength in gold has really hit the gold price over the last week, and we have actually broken down. Now, we talked about this in the report. We do get a summer rally in gold, and that typically happened last year. It happened around the end of May. We're only a few weeks away, where we would expect gold to rally, but it's dipped first, and it did that last year. So at the moment, we're saying nothing major to be worried about, but there is no question we've got these big upside targets. We've got to move higher than this sort of 1370, 1375 level for those to be activated. So in terms of the gold price, that has been one thing that has fallen away this week, and so it would be easy to say, well, in terms of the report, gold now doesn't look set to rocket, but it's probably having a pullback before it runs, and that the seasonality suggests that. And if we look at the short-term targets, we've got now 1266. The 1 minute chart shows us 1269, so we could still go lower, and that is activated. So we could still go lower, about 1.5% on gold, before we go higher. So gold is the one thing that is probably feeling like, in terms of the report, is not doing what we said. The next question was how much higher can the oil price go? And again, here we have seen a big change, but this time in line with the report. And if we look at crude oil, so this is Brent crude, just continuing to go higher, has been above $80 today. So Brent pushing higher, that is still happening in line with the report. And if we look at the targets, they're of course not changed. We've got these upside targets to 84, 85. We said mid-80s. We were in the high 70s when we said that a week ago, and we're pushing all the time towards that. Of course, we talked about the seasonal effect and the correlation with the dollar, but in this instance, stronger dollar and stronger crude we're seeing coming into line with each other. And the 60-minute targets, again, we will have seen a slight change here because this is a short-term chart. We're seeing 72 dollars is really the next stop, and that's a cluster. We've got two targets, 1.5% higher, 76. So we're seeing, this is on WTI, we're seeing these targets pushing higher all the time. And of course, we can go and look at crude. And if we just take a look in Updata on my charts today system, we see that weekly candle just pushing higher there since we looked at this a week ago, and we've got these targets now on Brent crude, $82, $83. So how much higher can Brent go? Quite a lot higher yet, and we've got quite a lot of targets here to the upside, 85, mid 80s, and low 80s. So at least another a few dollars there in the tin. And if we look at WTI, we're seeing these targets that we talked about a week ago still there as well. So in terms of the oil price, yes, higher still. Now, can Bitcoin move above $20,000? And Bitcoin is a very interesting situation because we are really at the moment right on the cusp of trying to break out. We're breaking down, and this is a daily chart. So since we looked at this a week ago, we've broken down. We did say in the report that we needed to clearly break above this medium-term cloud. Was trying, but it's failed, and we're still bearish in terms of the lagging line on Bitcoin. And we do have these massive downside targets, $5,000 on the long-term 1% chart. And if we look at some of the shorter-term charts, this is the 60-minute chart, $8,000 is really the next stop. That's not that far away. And of course, again, we can go and look at Bitcoin in Updata, and we see here we've got this downside target. 6,100 is the medium-term target activated. That's 25% downside. So in terms of can Bitcoin move above this $20,000 level? For the moment, that looks like it's off the cards. Last question was which market was the potential black swan, and here we said it was China. And again, we can just go and look at our charts here. The last four charts in the report. China, the long-term picture, not much changed as you would expect in a week. If we take a look at the downside target still hanging over us, new downside target activated, 21 percent there. Was that in the report? Yes, we did have that target there in the report activated, so no change there. And then last of all, we can actually just look at some of the picture here. This has been taken to the wire on China. We look like we're breaking out on the price, but not yet clear that we've broken to the upside. This is on the Hang Seng market. And then last of all, the Hang Seng index again could go either way. So in terms of looking at the Chinese market, again, we can take a quick look at that in our charts today. Looking at the composite, we've been pretty flat for the last week, just breaking down out of this range, still medium-term bearish. This is the chart to watch, just got to worry about that. So in terms of the report, we can go back and just look at the overall picture of the report. The big questions are US stock market entering a new bad trend. Jury's still probably out. Tech stocks are set to rally higher. Well, there's been some improvement. CAC 40 is still the best looking market in Europe. Sell and may go away seems to still be holding true so far this month. Bond markets, we've seen that bond rally, that's really taken off on US 10-year yields, so we're seeing that coming to play. Currencies, dollar strength, we're seeing really flowing through. Gold has sold off, so that is one that's gone slightly counter so far. And then the oil price, of course, has gone in line with expectation. Bitcoin is struggling at that recovery, so $20,000 at the moment is looking off the cards. And which market is the potential black swan? Well, that worry has not removed. So that's just a commentary of the report. If you haven't read the report, go and download it and keep an eye on these 10 things. That's what we think are the 10 big things for the coming year. That's it for now. Why not take a look at the report, and if even better still, take a trial of Updata.